Bonjour. Welcome to Wahsa Distance Education Center's radio Zoom classes. This is MEL3E, grade 11 workplace math, and I'm the teacher Bronwyn Slate. If you'd like to join me live today, you can call the Wahsa studio at 1-800-465-7144 or 737-4017. You can listen on the radio at 91.9 FM and also on the television at Bell Express View Channel 972. You're always welcome to join me live through the Zoom link, which is available both from me, your teacher, and also your DEC. Our classes are scheduled Monday through Thursday, 9 until 10 in the morning. And we are now in our 5th week of our 9-week course. So at this point, you definitely should be submitting work for marking. So a reminder that the support questions, the ones with a little pencil icon, are not for marking. You decide which ones and how many to do. If you're understanding the concept, it is okay to skip questions. You don't have to do them all just because they're there. But also, if you need more practice, it's totally fine to ask for more practice, and I will send you more. The key questions, however, are the ones with a little key icon, and these are the mark questions. So these ones, you need to do all of them. You need to show all of your work, your steps, and your thinking. This way, I can know what it is that you know, and if you are struggling with anything, then I get more information about how I can help you. So how do you submit your work for marking? Well, there's 3 methods. The first is to scan your work and send it electronically. If you have a device, you can scan your completed work using that device. Apple devices have a Notes app that has a scan function, and Android devices have a Google Drive app that has a scan function. They're fairly straightforward, point and click, and they make your files smaller and easier to send. If you need some support, on my YouTube channel, there are tech tutorials that walk you through how to step-by-step scan for both of these apps. So go and check those out if you want some more support, or also feel free to ask. Then you can send it to me either through email to studentwork@nnec.on.ca and CC it to me, bronwyn.slate@nnec.on.ca, or you can also send it through Facebook Messenger, where my name is B. Slate Wahsa. The second method is to drop it off in Sioux Lookout. We have an outdoor mailbox at our location, 74 Front Street. We are the bright white building next to the post office and have a small white mailbox next to our side entrance. You can just put your work in there at any time. The third method is to hand your work into your DEC. Your DEC can either send your work through the Express or fax it to 807-737-1732 or toll-free fax to 1-800-463-7852. Students can also send their work in through the fax. Just let us know that you're sending it, as sometimes things get lost in the shuffle. If you'd like to connect with me through social media, both my Facebook and YouTube channel under the name B. Slate Wahsa, so you can find me there. All of our radio Zoom classes are recorded, and I upload them to YouTube shortly after broadcasting. So you can find them there so you can review things as needed. Also, there are short videos that explain common errors and confusing concepts on my channel. So that's a really good place to check out if you are struggling with something. Methods are really visual subjects, so I strongly encourage you to access the videos. This is going to give you the most understanding and the most connection to all of our ideas. So if you can't join me live through Zoom, you don't have to talk to me if you do join me. You can just watch, that's fine. And you can't watch the YouTube videos, let me know, and I'm happy to send you a copy of the recordings so that you can still get the full experience. If you have any questions or concerns, please reach out and contact me. You can email me at bronwyn.slate@nnec.on.ca. You connect with me through Facebook at B. Slate Wahsa. Give me a call at 807-737-1488. My extension is 2209. Or toll-free 1-800-667-3703. My office hours are Monday through Friday, 8 a.m. to 2 p.m., though I teach from 9 until 11, so that is not a great time to try to get a hold of me. Today, we are looking at credit cards a little bit deeper, so this is not actually in your booklet. We covered everything that was in your booklet on lesson 11 in our last lesson, but I just wanted to look at credit cards a little bit deeper, as this is something that many folks use and don't necessarily know fully how to use them appropriately or to the best of their ability. So at the end of this lesson, I hope that you will be confident in your ability to be an informed credit card user, that you will understand the dangers of using a credit card, and you'll be able to explain safety tips when you're using a credit card. So you know you've met these learning goals because you can identify how to be an informed credit card user. You can explain the dangers of credit cards and how to recover from hard situations. And you can describe how to safely use a credit card. When we'll use this in real life? Well, we're learning how to make informed decisions. Life is full of decisions, both easy ones and hard ones, and we are learning how to inform ourselves so we can make the best decisions for ourselves. But first, let's activate our brain with some mental math. I don't believe in bad math minutes. I think that they cause stress and anxiety in students and don't really set them up for success. So instead, we work on developing strategies that you can use in various situations that help you become a confident confident user. Just numbers in general. Okay, so today's question is 672 divided by 34. And we are going to be using the strategy of partial quotients. Now, my technology is giving me some trouble today, so I'm doing this using a mouse. So I'm sorry, my numbers and writing might be a little shaky, messy in a different way than it usually is. All right, so partial quotients looks like long division when you're starting. So you write it in a similar way. Some people call it the big 7 method because you write it out so it looks like a big 7. But it's just an organizational tool. So the idea is that we're going to think about the number of groups instead of doing long division where we think about the digits individually and we don't think of them as a whole. We're going to think of our numbers as a whole parts. So we're going to say 34. Okay, well, how many groups of 34 fit into 672? Well, and I'm going to pick friendly numbers. I'm not going to just try to pick the biggest. I'm going to pick one that I know for certain. So I can see that 10 groups is going to fit. So if I do 10 groups, this is my very slow, painful mouse writing. Okay, if I do 10 groups, that's 340. If I do 10 groups of 34. So I've organized that already. So this is why I can subtract them away because I don't need to deal with them anymore. So if I subtract 340 away from 672, I am left with 332. So I can see that 10 groups is not going to fit again in this 332. I don't have enough things. And I could say, well, maybe 9 groups is going to fit in there. I'm not sure. So that's not super friendly. Again, what I'm going to do is I'm going to pick a friendly number. So I'm going to say, well, I know that half the number of groups, 5 groups, is going to fit. So if I look at 340, and that is 10 groups. So half the number of that is going to be 5 groups because 5 is half of 10 groups. So half of 300 is 150, half of 40 is 20. So that's going to be 170. Okay, so again, I'm going to subtract that away to see what I have left. Now, 170 take away from 332 is a little bit tricky. So I'm going to think up, well, if I go from 170 and count up, I'm going to count up to by tens. So I'll say 180, 190, 100, or 200. And then I keep going up to 330. So that's going to be another 130. So that's 160. So take away 100 is going to be 162. So again, I can see I don't have another 5 groups. And I still have more. Okay, so now I can start saying, okay, well, maybe we can say that we probably have 2 groups of 34. So I'm going to put in 2 groups. So 2 groups of 34 is going to be 68. So 162 take away 68. Well, 162 take away 60 is going to be 102. And then take away another 8. Well, if I take away 2 first, I get to 100, and then I need to take away another 6. So I'm going to get to 94. So I can see that another 2 groups is going to fit. And I'm going to have 68 again. So 94 take away 68. Well, 90 take away 60 is 30. So then 34 take away 8 is going to be 26. Sorry that I've run out of room. So that means that in total, I have 10, 15, 17, 19 groups and 26 remainder. And that's how partial quotient works, is that you take away your groups in friendly numbers. All right, mine's on. What do we need to know today for our learning? I wanted to talk about, this might not be something that you already know, but it is something that we should know. Is that Canada has put into law a new credit card transaction fee. That's a little bit confusing and a little bit frustrating for our consumers. So businesses can now charge customers an average fee of 1.4%, and it can go all the way up to 2.4% just for using your credit card. So this is not, it's not anything different. You don't have to do it. You're not doing anything different, but they can now, this is a fee that they used to have, and now they can transfer that over to use the consumer. Sorry. As of October 6, 2022, businesses are allowed to transfer the fee they used to be responsible for to the customer. So this is in theory to help the small businesses, but it does not help the consumer. It does not help all of the people who we're paying higher and higher amounts for things. So how do you know if your retailer is charging you this transaction fee, just so you can make a decision in terms of if you want to be using it or not, that business? They have to have a sign posted at the entrance of their physical stores and on every receipt and at the point of sale online and in person and over the phone. So they have to tell you that they're charging you this fee. Also, when you are purchasing, you have to be informed by how much the surcharge is, and you can back out at any time. You don't have to, if you're completing the transaction, you can say, no, I don't want to actually use my credit card. I don't want to buy this, or I'm going to change and use something else. You get to make that choice, and there's no penalty for you choosing to do that. So then how do you actually avoid paying this credit card transaction fee? So just paying the fee for using your card. Debit card and cash payments still have no fee. So that you can choose to use that. You can avoid businesses that are charging these fees. So you can learn the ones that are in your communities that are using this fee and stop using that if that's an option. You can avoid online payments because they predominantly go through credit card services. If you're going to still use those, you can also, some of them accept Interact debit payments. So that's another option that you could use. All right, so what new ideas are we going to be looking at credit cards today? So credit cards are neither good nor evil. They are not, they can be really useful. They can also be really detrimental. It's not about the credit card. It's about how you use your credit card. That is the thing that could get you into really big trouble, or it can be really, really useful and really, really positive. So we're going to look at how the advantages of it and how we can use it successfully, and how the dangers of credit cards as well, and how if we get into a situation where we have a lot of debt or a lot of credit that we can't pay back, how we deal with those situations. So first, we're going to look at wise credit card use. So some of the advantages of a credit card is that it's a safe alternative to cash. It helps build you a good credit history. It bails you out in an emergency. It gives you time to pay if you've spent money that you don't have. So again, back to that emergency situation, if you have to all of a sudden buy a new furnace or a new oven or something like that, you don't have that money, then it gives you some time to pay that over time. And it enables you to take advantage of bargains and sales and things like that. So it can be useful to use. If you're clearing your balance on time constantly, there's no interest, so there's no cost to it if you're using it wisely. Okay, so let's look at some positive credit card use. So if you are an informed credit card user, you're making informed credit card use, then this helps to develop positive credit history and a good credit report. You get a high credit score. And then this earns you a high credit score, which then gives you the opportunity to have lower interest rates on any loans that you're having. It also gives you opportunity to use different forms of credit, and it's easier to be approved for future credit use. So in terms of getting a mortgage or buying a car, things like that, if you have a high credit score because you've been really careful about using your credit card, then it means that you're more likely to get approved for those types of loans. So what is informed credit card use? So first, paying your credit card balance in full every month. That is the key. Paying your credit card bills on time, applying only for credit cards that are needed, so not having a whole bunch of cards that all the time, keeping track of all your charges by keeping receipts and using a check register, so checking to make sure that everything is lining up the way you expect it to, checking the monthly credit card statements for errors, so being aware of what's going on your card and what isn't, if there's any mistakes or anything that is not yours, being aware of that. So how should you use a credit card to be an informed user and to really set yourself up for success? So there's 4 principles to master. You should always handle your credit card with extreme care. Unlike your debit card, with a credit card, you're making purchases on credit. So that means you're 100% liable for paying back everything you charge on your credit card. If you aren't careful, you'll end up with a lot of debt. So with a debit card, you have to have the money. You can't spend it if you don't have the money. With a credit card, you don't have to have the money, but you still are responsible for paying back. And if you don't pay it back, you can get into big trouble. And it can really have big long-term effects on your life, financial life. So once again, if you take anything away from this lesson, if you only remember one thing from today's lesson, pay your bill on time and in full every single month. That is how you are going to set yourself for the most success. Just doing that is going to help your personal finances a lot, tremendously. So pay your bill on time and in full. Every time. Okay, so rule number 1. So why always paying your bill on time and in full is a good idea. That's why is it the first rule. So this is the most important principle of using your credit card, is always to pay it on time and in full. So this means that you're avoiding interest charges. You're not paying extra money just for using the credit card. You don't have any late fees, and you're not going to get a poor credit score because you are being reliable and responsible with your credit use. So this all helps build you a high credit score. And also you don't pay more money just for using the card. That's why it's number 1. That's why it's the best thing to remember. So let's look at a little bit of the consequences of missing a payment. So life happens, you forget to pay your bill, or you can't pay your bill, you miss a payment. So missing one payment isn't the end of the world, but if you keep missing payments, that's when things change. So by consistently missing payments, you end up paying hundreds of dollars in late fees. The negative consequence spirals. So once your credit score takes a hit, you can then face thousands in interest when applying for future mortgage or other loans. So if you are missing payments on your credit card, you're paying more interest, you're paying late fees on that, you're getting a higher interest rate on your credit card, and your credit score gets worse. So that means that in the future, you are going to get a higher interest rate for other loans, so you end up paying more money then. So if you're unable to pay your bill on time, if you're having a hard time with that, it might be time to cut up your card. It might be time to just stop using your card. It sucks, but if you can't pay your bill, then you shouldn't be borrowing money. You really should be using your credit card like it's just like your debit card. You only are paying You're only using it for money that you already have. You're usually given multiple options to pay your credit card. On your statement, it'll tell you that this is the whole balance. This is the minimum balance, which can be as low as $25, maybe $10. But then you start to accrue interest, and this leads you into years of debt. So think about that compound interest that we talked about, and how when you're investing and you make compound interest, that's great because you're getting interest on interest. But if you are missing a payment and it's a loan and it's compound interest, it means that you're paying interest on interest. That is not a good thing. So the best practice is to pay off your credit card bill as soon as you make the purchase or as soon as you receive the bill. This way you can get into the habit of paying your bill long before the due date. So not waiting until the due date, but just paying it as soon as you can so that it's done with. All right, rule number 2, keep your balance low by only charging what you can afford. So it's essential to keep your balance low relative to your available credit. You might have a lot of credit, and that can be really tempting to just keep charging things because you are like, there's money there. But a low balance helps increase your credit score. So yes, in terms of your credit score, it's funny because you want to be using it. Your credit score is best if you're actually using your credit card and paying it off, but you have to be paying it off. That's the key, is that you need to be paying it off right away and in full in order to get a good credit score. So keeping your balance low, as in even zero, so that you buy things, pay them off, and then your balance is back to zero, is really good. It's also easier to pay your balance off in full and on time if your balance is low. If you're not having a lot of money on there, then it's easier to pay it off. There are many factors that determine your credit score, but a significant portion, up to 30%, comes from what's called credit utilization. So this is the ratio of what you owe to your total credit limit. So how much of your credit you're utilizing, how much of your credit are you using? So for instance, if you have a credit card limit of $1,000 and you are charging $500 to your card and it's there, then your credit utilization would be 50%. You used up 50% of your credit. That's high. So that's going to have a big impact on your credit score. So then it's also important to realize that your credit card is not part of your budget. It is not money that you can budget for because it's not real money. So don't view your credit card as an extension of your budget. You should never charge more than what you can currently cover in your bank account. It is always best to only use your credit card for money that you already have, and then you can pay your bill as soon as you get it. It's tempting to spend ahead based on what you know you'll get paid, but it's bad practice. If you lose your job or run into an emergency, you won't be able to cover those charges. So even if you know, oh, I'm getting this money that's coming, life happens, you don't know what's going to happen. So it's best to just spend the money that you currently have. People generally don't intend to have bad credit card debt. That is not something that people set out to be like, oh, I'm great, I'm going to have credit card debt and that's going to be super stressful. Awesome. No, it is something that builds slowly and becomes a vicious cycle that becomes harder and harder to break. So plan ahead, be preventative, opposed to reactive. Deal with it. To start with, being aware of how to be a good credit card user. All right, rule number 3, understand how your interest is calculated. So, contrary to popular belief, interest isn't calculated based on the remaining balance after making a minimum payment. In reality, issuers calculate interest based on your average daily balance, calculated by taking your card's APR and dividing it by 365. It is compounded daily. So think back again to the compounding interest lesson that we've done. And compounding daily means that they are rolling that interest in every day so that you are now earning interest on that interest every day. So that's going to lead to you having to pay a lot. So for example, assume you have a statement balance of $1,000 and you're making $800 payment on the due date. So now you'll be charged interest on the remaining balance of $200, and you also lose your grace period. So that means that for every transaction after that payment that you made, now you start getting billed interest immediately. Doesn't matter When you buy it, you're getting paid or you're having to pay interest on it immediately. So the grace period is when no interest is charged. This only applies if you pay your balance in full by the payment due date. So that's why it's super important to pay your balance in full on the due date, by the due date. All right, rule number 4, monitor your monthly statement. Monitoring your statement helps you check for fraud, stay on budget, and maintain a low balance. Keeps you informed. Even if you set up an automatic payment, it's still wise to log in and check your statement every month to ensure there's no suspicious transactions. Thankfully, most issuers have sophisticated technology that checks for fraudulent charges, but they may not catch them all. At least once a month, it's good to check your statement to verify that there aren't any purchases you don't recognize. To just be aware, it's important to be informed. In addition to checking for fraudulent activity, monitoring your statement helps you stay on budget. There's no way to know if you're maintaining a low balance, keeping your spending in check, or blowing the budget unless you're regularly checking in. It's so easy to want to avoid it, to want to not pay attention to it, to just think that if I don't look at it, I don't need to be stressed. This is not true. Being uninformed means you're more likely to get yourself into trouble. All right, so let's look at the dangers of a credit card. So negative credit card use. So if you're not paying attention, you're inattentive and you're using a credit card, leads to developing negative credit history and a credit report, which leads to a lower credit score. So that consumers with low credit scores have difficulty getting loans, difficulty renting apartments, pay higher interest rates, pay higher insurance rates, and have difficulty obtaining a job. All of these things are attached. So paying attention is super, super important. So what does inattentive credit card use look like? So this is making late credit card payments because you're not paying attention to when your payments are due. Only paying the minimum payment. Exceeding your credit card limit, so not being aware of how much you've already spent and then spending over your limit, which your credit card will let you do, and then they'll charge you money for it. Charging items that you can't pay off immediately, and so carrying those balances for any sort of time. Owning too many credit cards, so having too much credit that you've available, which you're not using responsibly. So what are the results of inattentive use? So you get an increased annual percentage rate, so your interest rate goes up. You get unnecessary fees. You get a decline in your credit. You get denial for future credit. And then, so then it's like, okay, well, why do I even want to do this? Maybe I should just not have a credit card. Maybe that's the safest option, which for some, maybe is the safest option. But if you have not used credit, there's no information on your credit report. So that means that there's no way to know if you're going to be reliable to borrow money for someone to lend you money. So it means that you can be denied to be offered credit. So you might not get a car loan if you have no credit score, no credit history. You might not get a mortgage. Someone might not want to rent you if you don't have any credit history. Things like this means that it can be really hard in life in general because you don't have that history saying that you are a good, reliable credit user. Okay, so then let's look again at this grace period and this carrying a balance piece, as this is something that really makes a big impact. So here's an example of a credit card that I found online. So here appears the closing date where it says the statement period is from December 17th, 2020 to January 16th, 2021. So this is talking about all the purchases that happened in that period of time, and it closes, the last day is the January 16th, 2021. Then here, your payment due date is February 13th, 2021. So you have a period of time that you don't have to pay back until that due date. So for this particular card, that's 28-day grace period. So after your statement date, but before you're required to make a payment, you're not getting charged interest as long as you didn't have a balance from before. So that's why you want to pay your balance in full by this date. Because all credit cards have different grace periods and their billing cycles are going to be different. So you have to be paying attention. You have to know what's best for what your card's doing. So you want to review your information on your credit card to understand how it works for you. And if you're having trouble remembering to pay your bill, most issuers allow you to set an automatic payment or schedule reminders each month, so they can help you do that, be on top of it. So let's look at this minimum payment again. So for example, this person, Miranda, is preparing for her first semester of college, and she's bought a new computer for $1,000 and textbooks for $500. She spent this on her credit card, so $1,500 on her credit card that charges 15% for her per year annually. How much would Miranda pay in interest if she makes the minimum payment? So if she pays it in full in that first month, she pays the $1,500, pays it off in that first month, she doesn't have any interest paid. If she makes a part of a payment, so she pays $135 each month, it's going to take her a year to pay it off, and she's going to end up paying $125 in interest totally. So she ends up paying that extra $125 for that computer and textbooks. If she only makes the minimum payment, which is only $30, it's going to take her 11 years to pay off the $1,500. She ends up paying $1,413 in interest, which is a total of $2,913. So she ends up almost doubling the amount that she ends up paying for the computer and the textbooks just by making the minimum payments. This is why the minimum payments are really, really dangerous. You end up paying lots and lots of interest. So what do you do if you end up in a situation where you have a large credit card balance? How do you deal? Because it happens. It's good to pay attention beforehand, but sometimes it just happens. So first suggestion is to set a goal. Start by setting a goal that you can achieve. It's important to be realistic in your goals. So even if that goal is just planning to pay the minimum payment for the near future, that is better than nothing. So we just talked about how paying the minimum payment isn't a great option, but it's better to pay the minimum payment than not pay anything. So watch what you're doing regularly and stay on track and motivated. Make your financial goals SMART: specific, measurable, attainable, relevant, and timely, to keep sight of what you're aiming for. Know where you want to end up. This will make it easier to figure out what you can do and how you can get there. If you need help, then reach out to a certified financial counselor. Ask for help. There's lots of different places online and in communities that will offer support about how to figure out how to deal with various debt. Number 2, put your credit cards on ice. And yes, we mean that literally. So instead of just cutting up your cards, what you can do is you can take them out of your wallet and freeze them, stick them in water, and then stick them in your freezer so that you can't just use them. So this way you still have them, but you can manage with paying with cash, paying with your debit card, money that you actually have instead of credit. And then you'll think a little bit more consciously and you'll be paying attention to what you're spending because it's the money that you have. Then once your debt is gone, you have cleared it, then you can throw out 1 or 2 of your cards. You only really need 1 or 2 cards, generally just 1. So you might thaw out just 1 or 2 at a time. Number 3 is prioritize your debts. Credit cards or loans, mortgages, make a complete list of all of your debts and list them in order of importance. So mortgage and vehicle payments are usually the most important because they provide you shelter and transportation, so rent too, for getting to and from your job. So if you don't have a place to live, you don't have a vehicle to get to and from your job, it's hard to pay off the rest of your debts. So paying those first makes a lot of sense. Then you have to decide what is most important, and that's going to be different for everybody. Some people, it is to get rid of your highest interest rates, or it's also might be dealing with a payday loan. You decide for your situation, what you need to do. The goal is to have a payment strategy that fits your financial needs while also keeping you motivated to pay off your debts one by one. So it's figuring out what is best for you. Number 4 is to trim your expenses. So if you have extra cash, then you can pay off your debt faster. So If you can cut your costs of other ways, then you can use that money to pay off your debt. So start to do this so you can start tracking your spending for the next 2 weeks or a month if you can, and you can learn how maybe you can not be spending money in certain places to then pay that towards debt. The classic is that if you save $3 from not buying coffee every morning, you will save over $1,000 a year. Sometimes you need the coffee. That is how you survive life. So you know what is best for you. You decide what is reasonable for you. If you're a smoker and you're like, I can just cut out smoking, I can quit smoking. Be realistic. Can you really just quit smoking? Maybe you can cut down how much you're smoking. Maybe that is a better option. You need to be realistic. So checking on your spending means that if you can find some ways to save money and pay it off on your debt, every little bit helps you get closer. That's the goal. Then create a monthly spending plan. So avoid having more debt. So creating a plan means that you have a budget, means you have a plan for your money that's coming, and you build in paying debt into your budget. So this lets you live within your means rather than above your income. And because that's where credit card debt comes from. So it's not about using your credit card, it's about spending money that you don't have. If you want to make a plan, again, there's things online that will help you figure out what is the best budget system for you. You can use the avalanche method to pay off your debt. And this is that you pay debt that are on your fixed monthly payments. So your mortgages, your vehicle loans, your term loans, things like that. And then you make your minimum payments on the rest of your credit cards with the lowest interest rates. And then you maximum your payments on your credit card with the highest interest rate. So you put most of your money on that one loan. Then once that debt is paid, you use all that money that you're paying on that one loan and you pay it onto your next credit card with the next highest interest rate. So the avalanche method helps you save money and helps you pay down all your debts faster. So it looks kind of like this, where you pay this credit card here says it has a rate of 22%. So we pay all of our extra money onto here. Then once we pay that off, we take that $100 and we put it into we add it to paying off your credit card number 2, which has a lower interest rate, and that we paying the minimum payment on, and then that we end up paying it there. And then now, once we paid off that, we can pay off our car loan, which we've had payments on. We've had a certain amount, but we can now add the money that we were paying to the credit cards before. And that goes and goes until you can pay off all of your debt. So with the avalanche method, you start with the highest interest rate. The other method is a snowball method. And this is a really motivating and popular method. So here you use any extra money that you have to pay off your credit with the smallest balance first. Then you pay that off and you feel like it was a quick win and you're awesome, like you feel so satisfied and accomplished that you paid it off. Then you take that money that you paid it off and you put it onto your next smallest loan or credit card. And that makes that payment bigger. And then you keep doing this until you're paid off all of your balances. So when you're snowballing this method, your debts get paid down faster and faster as you go, instead of just spreading your money out all over the place. And you get more and more motivated as you pay off one card after the other. So here again, you can see it is not the highest rate, but it's the lowest balance. So you pay that off and then you paid it off. Awesome. Yay, you win. And that money that you're using to pay off that card, you put into the next one until you pay that one off. Awesome. You paid that off. Great. Then you take that money and you roll it into the next debt. You continue until you paid off all of your debt. So with snowballing, you start with the lowest balance. That's how it works. So deciding, is the avalanche or snowball right for you? Each have their own perks. It's really personal. So paying off the highest interest rate first is mathematically correct. You pay off, you're going to end up paying less money. The psychological benefit of watching your debts go away faster, even if they're the smaller ones, is really, really important. You may be more likely to be motivated to keep paying off your debt if you've dealt with one of a small debt or something. So some people are highly motivated by numbers and that works for them. Some people are motivated by their feelings about being accomplished and that works for them. You decide what's right for you. You know what's going to be the best way for you. There isn't a right way. It's just doing something is the best. Once you have paid off a card, cut it up and cancel it. You don't need to have a whole bunch of cards. The next suggestion is to use your savings. This will help pay down your debt faster. It's good to have savings. It's good to have an emergency plan or to plan for the future. That's all really good. But sometimes dealing with your debt first is important. So still having an emergency fund is good so that you aren't stuck with having to use that credit card as your emergency fund. But then paying any extra money that you have into your debt is a really good idea. This is going to pay it down faster and faster, and then you'll be able to go back into your savings. Also, if you have other things like a bonus or a raise or an income tax refund, things like that, anything where you get all of a sudden extra money, put it towards your debt. A debt consolidation loan can be a really good option. So when you use these correctly, debt consolidation loans or balance transfers are a really good way to get out of debt. However, most people really struggle with this. So if you're consolidating your loans, that it means that you have to stop your spending. You can't just keep digging yourself deeper into debt. So you need to change your behaviors. Is really, really important. So how you do this is that you take all of your loans and your debt and you put it into one place usually with a lower rate, and then you can pay it off, just paying the same amount off and getting it down faster. Be careful because there can be fees and other interest rates and things that you need to be paying attention to. Also, then you have to cut up and cancel any of your other credit cards. You can't keep them just because they now have a balance on an open credit on them. You can't do that because then you're just going to get yourself in trouble. Then you can also refinance your mortgage as a last suggestion. If you have a mortgage, if you own your home, there's equity there. So that can be something that can be really useful, but borrowing against your loan can be really, really dangerous. And it isn't always, it's a good idea. This is why it's at the end of the options. You do not want to use your home as an ATM because then you end up with a lot of debt and no assets and no savings. So it's really, really important this is like last, like you're about to be bankrupt and this is your last ditch effort. Again, if your banks and credit unions aren't able to refinance your mortgage, talk to a credit counselor, see if there's somebody who can help you figure it out. All right, so building up your credit score, you know how it's calculated. We don't have a lot of time left, so we're just going to look briefly that this is here. You can pause the video and read it if you'd like, but this is really important to understand how your credit score is calculated and how it all works together. So there's some strategies of building your credit score is to never cancel your first card. Always keep your longest credit line of credit. Ask for a credit limit increase, but don't increase your spending. So that changes your credit utilization ratio. If you are opening a new credit card and you can set a recurring bill or automatic payments to that card so that it just gets, you are paying it over, like it's getting something on it and then something off of it, is a good way to build up your credit score. And pay off all your credit cards a few days before each statement closes if you're applying for a new loan soon. So making sure that you have less credit utilization is going to help your credit score to apply for a new loan. Like quickly, just some safety tips. Sign your card. Don't leave your cards lying around and report them lost and stolen if they are. Close any unwanted accounts and cut up your cards. Do not give your account numbers out unless you're making a purchase. Keep a list of all your cards, accounts, and expiry dates and phone lists separate from your cards so that if you lose them, you can still talk to your company. Shred any pre-approved credit card offers and applications or solicitations. You don't want to go into those. And you don't want anybody to be getting credit cards in your name. That is a big way fraud happens. Never keep your PIN with your card. Never write your PIN down or have it the same as other cards' PINs. Be sure your credit card is returned to you after you're making a purchase and always know where your card is. Confirm the amount shown on your bill is correct before you're authorizing a purchase. And never give away your number, your PIN, your expiry date to anyone who calls you and says you want a prize or they need to do a security check. This is not how banks work. Don't give your information away. Being safe online, you can also use a prepaid credit card. You can use a credit card rather than a debit card because then you have some support from your credit card company. And make sure you're dealing with a reputable company when you're buying things online, that it's not a scam. If your card is lost or stolen, call your bank immediately, let them know. You might not have to pay any of if the thief is shopping, you might not have to pay anything of it, but you have to communicate with your bank. Also, don't keep your PIN with your card. If your PIN's with your card and they use it, then they're going to say, oh, there's no way for us to know if it wasn't you. Okay, so quickly, let's consolidate what we talked about today. So important to use your credit card wisely. It can be a really great advantage, but you need to use it effectively. There are dangers of a credit card. So carrying a balance or figuring out how to manage large balances or building credit, these are all things that you need to be aware of and learning how to do if you're going to be using a credit card. Some general safety tips on how to use it. So just be conscious of it. So hopefully you feel like you are informed, you know how to be an informed credit card user. You can explain the dangers of credit cards and how to recover from hard situations. And you can describe how to safely use your credit card. If you have any questions, please reach out and connect with me. Even though this lesson doesn't have support questions and key questions, I still think it's really, really important, which is why I made a lesson on it today, because it's important general life use. Thank you so much for joining me today. Miigwech.